Hey everyone, Monticello Advisors here. If you're a business owner thinking about selling your business or transferring your ownership, the One Big Beautiful Bill Act is relevant. Understanding the implications of it on your exit strategy is really important. While most of the buzz has been around the gift and estate tax exemptions, there's a lot in this bill that could impact your exit strategy. So let's break down the 4 key updates that you should be thinking about prior to an exit. Number 1, bigger tax breaks for C Corp owners. If your business is a C Corp or you're thinking about converting to a C Corp, the OBBBA expands the qualified small business stock exemption from $10 million to $15 million, and it shortens the holding period from 5 years to 3. So prior to the OBBBA, you had to hold that stock for 5 years before you would get a benefit. You now start to get a benefit at the end of 3, and the total benefit is increased from $10 to $15 million. This is a big deal. This makes the C Corp structure very compelling for founders. Now you got to remember, this is not for everyone. So if you're an S Corp owner or an LLC or structured as a sole proprietorship, you don't qualify. And so reach out to us here at Monticello if you want to explore whether or not the C Corp conversion makes sense for you. Number 2, estate planning just got a lot easier. Starting in 2026, the federal estate and gift tax exemption will be permanently set at $15 million per person. This basically puts a lot less pressure on doing long-term planning before what was going to be a December 31st deadline here in 2025. This is good news federally, but a lot of states don't follow the federal laws. So states like Illinois have much lower thresholds. I can share plenty of horror stories of families that have come to us after the fact that had to write a monster check to the state of Illinois or Governor Pritzker because they didn't do the right planning. So make sure you know your state rules. And if you need some guidance on that, reach out to us here at Monticello. Number 3, there's new rules for charitable giving. Charitable giving deduction starts at 0.5% of your income. So that means that the first 0.5% that you give away, you're not going to get a benefit from it. And that's why strategic giving is going to matter going forward, because you can do something like a donor advised fund where you stack your charitable giving in year 1, you give out of that donor advised fund over 2 years, and maybe in the second year, you take the standard deduction. You give the same amount of money away over that 2-year window, so the organizations that you care about, you're able to impact them in the same way, but you're also able to more positively impact your tax liability with this strategy. So strategic charitable giving matters if you're charitably inclined. Number 4, bonus depreciation is back. The OBBBA restores 100% bonus depreciation and raises the Section 179 deduction to $2.5 million. This means you can deduct the full cost of qualifying assets like equipment, tech upgrades in the year that you buy them. This is a big deal. It's great for cash flow, and it's super compelling to reinvest back in your business. The one important thing here is to check your state's rules because they don't always match the federal rules. Final thought, this bill opens up some interesting opportunities, but it also adds complexity. Whether you're planning a sale, planning to gift some shares, or just upgrading your business, now is the time to get proactive. If you have questions, reach out to us here at Monticello. We can help ensure that your strategy encompasses your most deeply held values and long-term goals and is in alignment with the OBBBA. We can help set you up for success.